So any asset related standard, as we already told, we can classify it into three parts. Any new standard in future, if it comes also, it is going to be only three. First we will acquire, then we need to hold, then we need to dispose. More than this, nothing will happen in asset related standard. Suppose if you acquire, there can be two types. One we call it as self-generated intangible asset. First I am telling the overview of the chapter, then we will discuss inner details. Self-generated, then purchased. Then acquiring means we can tell initially. Or initial recognition also we can tell. No need to write, because if I make changes again you need to change that. You can wait, we'll give time for copying. Because if I do one chart, if I change it again you need to cancel and write it. For me it is not a problem. I have eraser, but you need to again cancel and write. Just don't do anything. So far what we have learned, it is there in your notebook or not. Like that, hereafter also it will be there, don't worry. Initial recognition for self-generated asset, for purchased asset. Then when you are holding, if it is investment, we may be getting some income. If it is intangible asset, if it is tangible asset, what is it we have done for group 1? Sorry? What is it we have done for AS10 subsequently? Now we need to provide depreciation. Subsequently, some additional expenses we may incur. Then past expenses expensed. What is the treatment? Then on balance sheet date, what we need to do. Then disposal, you may call it as disposal or retirement or disposal, what we need to do. Similarly, if it is purchased, as how for tangible asset we have various modes. You can buy it by way of cash, by way of shares. Like that here also you can buy it by way of cash, or by issuing shares or securities, or by way of exchange of asset, or the nature of amalgamation. Amalgamation two types again, merger, purchase, then grant. Here also we have these possibilities. For every case we need to know what is cost also. Then self-generated, in which we have two types, identifiable or non-identifiable. Identifiable two stages we have, research, development. Now if you look it into our ICA background material for AS26. So this is ICA background material. It is there in your study material itself, or open source. Go to Google, type AS26, you will get this. So objective definition, what is intangible asset, etc. Then recognition and initial measurement. If you separately acquire, what will happen? Amalgamation, what will happen? Grant, what will happen? Exchange, internally generated, self-generated goodwill, internally generated intangible asset, research stage, development stage, recognition of an expense, past expenses, subsequent expenditure, measurement subsequent to initial recognition, what is the amortization method, period, residual value, recoverability of carrying amount, impairment loss, retirement and disposal, disclosure. So all those things are here. So instead of seeing one by one, this is what we are going to attack in this particular standard. We can understand. Then we will just understand what is the meaning of intangible asset. From that we will just first to make note of this. One by one area we will just discuss. That is what on day number 1 we have told. If you have separate note for this and that, it will be useful. Don't mix this and that. You can take your notebook reverse and you can start reading. At least to develop index. Assign page numbers. At the time of revision, what in which page you have written, at least you will be knowing. Keep AS in separate notebook. Let it maybe IPCC or final. It will be useful. Grant, government grant. Amalgamation to merger purchase. And again reminding everyone, whenever you are copying, you copy horizontally. It is easy for us also. When we just scroll like this, everyone will be writing uniform, means it is easy for us. Copy horizontally. Now, first, what are intangible assets? Then we will discuss all these things. When you acquire, what will happen? Subsequently, what will happen, and all we will discuss later. What are intangible assets first of all? The famous definition right from 11th standard, which we cannot see, which we cannot touch, but we can feel. Routine definition. Example, if you ask for intangible asset, only one example, goodwill. There. But how it is defined in AS number 26. Intangible asset. An intangible asset is an identifiable non-monetary asset without physical substance held for use in production or supply of goods, for services, for rental to others, or for administrative purpose. So what are all the qualities for intangible asset? Means it should be identifiable, non-monetary asset without physical substance held for use in production or supply of goods or services. That is for captive consumption or for rental to others or for administrative purposes. So what are intangible assets? First quality, identifiable. Number 2, non-monetary asset. Number 3, without physical substance, for use or that is for captive use or rental to others, either for our own benefit or for others' benefit. So whenever we are telling definition, we will tell only this particular part, which we cannot see, which we cannot touch, which we can feel. That is, in one word we can tell, without physical substance. That's all. So first important quality being, it should be identifiable. Now 11th standard, 12th standard, or even IPCC, CPT, wherever we have studied IPC group 1, in partnership topic we will tell goodwill shall not be brought into books. Especially the goodwill which they are valuing should not be brought into the books, but we will give adjustment for that goodwill through partners capital account. Why goodwill should not be brought into the books? Reason, self-generated goodwill should not be brought into the books. Here also we have told self-generated, identifiable, non-identifiable. So in the classification you can understand non-identifiable, identifiable. So self-generated intangible asset itself two types possible. Goodwill we are telling it should not be brought into the books because it is non-identifiable. Say if there is a dancer, can you separate dance from the dancer? That is how goodwill cannot be separated from the business. The reputation of an organization cannot be separated from the organization. And most important thing is that when they are telling recognition criteria for intangible asset, anything, any asset, you just take it up. Intangible asset should be recognized one and only if it is not only intangible asset, it may be any asset for that matter. Generally, two conditions should be satisfied. It is probable that future economic benefits are attributable to the asset will flow to the enterprise, and cost of the asset can be measured reliably. So, whenever we tell a particular product, immediately we will be attached to a particular brand name. So, for example, we tell Band-Aid. Is it the correct name? That is brand name of Johnson & Johnson, I think. So for many years I don't know about this Xerox first of all. I think I already told in one of the class. I took one of my friend who is from Kerala. He was asking me money, I need to take a photocopy. I thought photocopy means he wants to take photo. Since he don't know places in Chennai, I took him to Konica showroom. Close to Nungambakam Institute, one Konica showroom will be there. We are attending some class there. He told the money I need to take photocopy. He didn't tell anything subsequently. I took him to Konica showroom. Then I told I will be waiting here. You just go take photo and come. Money I told I want to take photocopy. This is the place I will take. They'll give copy also. I told. Then he took one scanner or something and he told I want photocopy of this. For this you need to go to Xerox shop. Money, that is what I am telling for the past 2 hours. Hey, you should have told it as Xerox. Money, the correct name is photocopy. No, I argued for some time. Then only learned the correct name is photocopy. In Kerala, wherever you go. Later on, subsequently after that, when we just came for this profession teaching, frequently we used to go to Ernakulam and all places it will be there mentioned as photocopy only. Only in Tamil Nadu in all places we have Xerox shop. Most of the places there they'll have the shop name as photocopy will be taken here only. Here only in all places we will have Xerox, Xerox, Xerox. So Xerox is a brand name, it is not the product name. So is it possible to distinguish that reputation whatever it has earned from that business means? Answer is no. What is the cost for developing this brand name? You cannot identify. It is definitely going to give some future economic benefits. Clear? There can be so many Xerox machines we may have or photocopy machines we may have, but still I am also telling Xerox machine only. Is it clear? So there can be so many plaster or some chemical name is there for that. But we call it as Band-Aid. When we go to shop also we will ask, like I want only Bindu Appalam, we want only Band-Aid only will be asking. Clear? So future economic benefits will be there definitely. But cost is not measurable. Reliably means we cannot recognize asset in our books of accounts. Simple reason, money measurement concept is absent. So it should be identifiable. So that is why self-generated intangible assets are not to be brought into books of accounts. Because you cannot assign any value for that. It should be identifiable. What is identifiable? Means identifiable means what? Identifiability means it is separable. Clear? You need to distinguish that particular asset from others. We cannot see, that is why it is without physical substance, but we should be in a position to distinguish this from other assets. Then, what are non-monetary? What does non-monetary means? When we hear the word non-monetary, what is it we can understand? Sorry? Not in terms of money. But if it is not in terms of money, just now we told it cannot be recorded in the books of accounts. So monetary means money, non-monetary means not in terms of money. It is not that way. Again, in AS 26 as well as 11 also, when we try monetary item, non-monetary item and all, we will be discussing. So I hope already we in some other class or you would have studied in basic. Asset means it is a resource controlled by an entity. Whenever you say resource, there should be definitely some future economic benefit. What are monetary assets? Money held and assets to be received in fixed or determinable amounts of money. Money held means cash in hand and cash at bank, and assets to be received in fixed or determinable amounts of money. If you take stock, can we call it as monetary asset? No, because the value at which you disclose stock, that is not the value at which it will be actually sold. That is possibly it could have been the cost. Nobody will be selling at cost, or possibly it could be NRV. It reflects only NRV on the date of balance sheet. Subsequently, when you sell, you will not be in a position to sell at that NRV. You may be selling more than NRV or less than NRV also. Can you understand? Take the case of building. The value at which it is disclosed in balance sheet. Suppose if you dispose, will you get that much amount? No. Land? No. So land, building, stock, all these are all non-monetary asset. Debtors. If you disclose 10,000, can you get from the debtor 10,001 rupee? It is a monetary asset. Bills receivable 1,000 rupees. Can you get 1,000 rupees and 25 paisa extra? It is a monetary asset. Assets to be received in fixed or determinable amounts of money, we call it as monetary item. Monetary item actually it is monetary, because this is a asset related standard, they are telling only monetary asset. If you come to AS 11, they will tell monetary item, it includes both assets and liabilities. Creditors, bills payable, here debtors, bills receivable, cash, bank balance, all these are all monetary items. So what are monetary assets or what are non-monetary asset? Non-monetary asset, easy definition, other than monetary asset. Then what are monetary asset? It is not money, it includes money also. Cash in hand plus money held. It is not cash in hand, it is money held. It may be in hand or at bank, plus assets, to be received in fixed or determinable amounts of money. Non-monetary asset, intangible asset, the value at which we disclose, it is not expected to dispose at that particular rate because we will record at cost. Without physical substance, no need for any explanation. For captive use or for rental to others. Whenever we have an asset, first of all it should be for some benefit only we are just keeping. Otherwise, it will go to this particular place. Clear? When there is no future economic benefit, the next step is you need to either retire or dispose from the books of accounts. Directly from here to here. The purpose of holding is to have some future economic benefit only. So what are the conditions for recognition? Number 1, future economic benefits flows to enterprise. Number 2, cost measurable reliably. If these two conditions are satisfied, you can recognize intangible asset in your books of accounts. So first to make note of this. either for captive use or for rental to others. Captive use, they are doing the administrative purpose, or it is used for providing services, used in the production of goods. So captive purpose means either admin purpose or for providing service or for production of goods. It is used for either providing service or production of goods or admin purpose. Conditions for recognition: future economic benefits flows to enterprise, cost measurable reliably. Throughout the standard, this is what we are going to tell frequently. Assets to be received in fixed or determinable amounts of money. Example: debtors, bills receivable, cash in hand, bank balance, etc. Completed? Now, how to or when to recognize intangible asset we have told. Then there are two modes of acquiring intangible asset. One is self-generated and purchased. Self-generated two types: non-identifiable and identifiable. Initial recognition intangible asset, two types. What are the two types? Self-generated and purchased. Purchased or acquired. Then self-generated, non-identifiable. Here identifiable. Non-identifiable shall not be brought into books. Reason: cost can't be measured. And if you go through AS 26, what is the example for self-generated non-identifiable intangible asset? Sorry, goodwill, any other? Sorry? How? If you have paid consideration for that, then you can identify. Sorry? If you have paid consideration, then no problem. Otherwise, you cannot capitalize. Internally generated goodwill should not be recognized as an intangible asset. Internally generated intangible asset. It is sometimes difficult to assess whether internally generated asset qualifies for recognition. It is often difficult to identify when there is an identifiable asset that will generate future economic benefits. Because right from day number 1 we could have taken effort, but when it is materializes, no one knows. It is very difficult to determine the cost also. And they could have given some list also for internally generated assets, like as per para number 50, internally generated brand, masthead, publishing title, customer list and items in similar substance should not be recognized as intangible asset. Internally generated brand, what are mastheads? Publishing titles, customer list. Customer list, I think you can understand. Customer list is nothing but, sorry, database of an organization. Say an organization may have some premium customer. For example, Aircel. Surya is using Aircel. Dhoni is using Aircel. Clear? So whether because of Surya or Dhoni is using this Aircel connection, people who are all fans of Surya or Dhoni, they will buy that product or not? Yes. Some mad people, they will do that. So I am also having Aircel not because of that. Even before advertisement is done, we have that. So just because some celebrity is doing, they will also do. Clear? Once some few years back, one person worked in our office. He'll be wearing one made of iron, one what is it, ring band or something like that. Then again chain, iron chain in neck. All these things he was wearing. Then when we are asking, okay, this is not the way you should come to office. So please understand the coaching center. Why you are doing all these things? He told one particular person, he is wearing in cinema, so I am also wearing. You understand, in people who are in asylum, mentally disordered, to ensure that they should not escape, these kind of things will be done. Is that clear? But now it has become a style. Clear? The height of comedy is that one of my distant relative, it's not matter relating to subject, but in the chain or more, the person's marriage got cancelled after engagement. The reason is the girl told that this fellow is not wearing these kind of articles. Kaduthula chain podukala, irumbu chain, kaila and he is not modern. Modern means he should wear the irumbu kaila chain podukanuma, kaduthula irumbu chain podukanuma. So idalam pannada I'll marry nu soltanga, another marriage cancel. So he is not modern, he is traditional, so I will not marry. So then only we are discussing. These are all only in mental asylum. People will be wearing. Okay. So always, நம்ம எப்படி இருக்கோமோ அப்படிதானே அர்த்தங்களை நம்ம எதிர்பார்ப்போம் இல்லையா? So that is the problem, sometimes it will happen. நம்மள மாதிரி தான் மற்றவங்களை எதிர்பார்ப்போம். So what is it? Mastered means publishing titles. So customer list and all, there is no cost. See, all these things for which there is only one reason: cost is not measurable, reliable. Future economic benefits will be there. But suppose if you have paid some amount to acquire that customer list, then we can capitalize. Mastered. Sorry? That is what I am asking. Something what you know you tell. Say, if you just take newspaper, these are all relating to magazines or newspapers. Hindu newspaper would mean immediately what it comes into our mind. That elephant, that is not logo. Logo is different. Is that clear? That is mastered. The first page, if you just think Hindu means immediately that comes into our mind. That is mastered. For n number of years, they are printing that way only. So that is mastered. So brand, mastered, publishing titles. Some people, they will publish their book in a particular way. Clear? Say for example, when LMS released two books. One for financial reporting and SFR. So the name will be, we are searching for some name. LMS for which what is a abbreviation or something we are planning. Then we just, someone suggested landmark. Landmark in financial reporting, landmark in strategic financial management. So short form for LM, like that we have this kept. So all our book series will be like landmark in FR. So that book is ultimate. That meaning also it conveys. The LMs are also, it will be addressed that way. So what is the cost to generate this particular word landmark means we cannot tell. Can you understand? But if someone is interested, sir, this word is good, hereafter we are also planning to do that. They have paid some consideration means then they can capitalize in their books. We cannot do that. Can you understand? So what are all the examples we can tell? Brand, masthead, publishing titles, then customer list or any other similar items. Reason, one and only reason, cost cannot be measured reliably. Then if it is identifiable, we will just discuss it as a separate part. Purchase portion will finish off easily, because what we tried in fixed asset AS number 10 in group 1, same thing here also it will be there. When we buy, we could have bought it for cash or shares or securities or exchange of other asset. Then amalgamation, merger or purchase, then grant. Now if it is by way of cash, what is the amount to be capitalized? Initial recognition, standardly will tell one dialogue cost. It is like in income tax salary chapter, sometimes they will tell salary to be taken, means in different contexts the term salary definition will change. Either in general we are telling initial recognition should be at cost. But what is cost if it is acquired by way of cash? The purchase price plus any other cost till asset ready for use. Example, any other cost. If you acquire, so acquisition cost will be there. Then any installation expenses. Sorry? Training cost cannot be taken. Strictly there is a paragraph. Sorry? Transport, in general it will be there for. Okay, we can take it. Any taxes you have paid, non-refundable nature, all those things can be capitalized. So what constitutes cost? It comprises its purchase price, including any taxes and duties of non-refundable nature, any directly attributable expenditure on making the asset ready for use. Simple definition, for any asset standard you can tell purchase price plus any other cost incurred till the asset is ready for use. Any cost means any cost. Professional fees or legal services, any trade discount, rebates, etc. are deducted in arriving at the cost. Okay. Like tax or duties of non-refundable nature. If it is acquired by way of shares or securities, what we told for group 1 AS number 10, value of securities issued or value of asset received, whichever is more clearly evident. Here also same. If an intangible asset is acquired in exchange for shares or other securities, asset is recorded at its fair value or fair value of the securities issued, whichever is more clearly evident. When both are clearly evident, whichever is value of securities issued, because whenever we say cost, cost means what is lost. So when we issue shares to acquire an intangible asset, what we have lost is important and not what we have received. Always cost means what is lost in general. Then, so why whichever is more clearly evident they are telling means sometimes value of the securities may be fluctuating, sometimes in abnormal situation it may be fluctuating. Because by the time we will not be in a position to estimate the correct value of the security, means we can take value of the asset received as cost of the asset. If it is exchange, For intangible asset, for tangible asset, what we have studied in group 1. When you give one asset to take another asset, what is the treatment? Value of asset given or value of asset taken, whichever is more clearly evident. Given up or taken, whichever is more clearly evident, blah blah blah. Intangible asset may be acquired in exchange or part exchange of another asset. Cost of the asset is determined in accordance with the principles laid down in AS, accounting for fixed assets. That's all. And one more thing they could have told that suppose if any additional consideration is paid or received, that shall be adjusted. You buy a new mobile and you are giving your old mobile. Most of the time, in addition to the old mobile, you will be giving cash also. So you are buying a 10,000 worth mobile. Old mobile they are exchanging it for 2,000. Extra 8,000 you are paying. So what is cost of the new mobile means? Value of the asset given up plus any other extra consideration paid. So in case of exchange of assets, value of the asset given up or value of the asset received, whichever is more clearly evident. If both are clearly evident, value of the asset given up should be taken. But if any additional consideration flowed from the buyer to seller, then that shall be adjusted in the price to arrive at the cost. If it is merger, any intangible asset arrived by way of merger, no question you should tell, no discussion. If vendor says donkey, you should also tell it as donkey. If vendor says monkey, you should also call it as monkey. Then only it is called as merger. 5 conditions. First condition, all assets and liabilities of transferor company shall become assets and liabilities of transferee company. 5th condition, no change in the value of the asset. So then only you can call it as merger first of all. So merger, subsequent doubt we should not have at all. Whatever asset is disclosed by vendor company, it should be disclosed in the books of purchasing company at same value. So what is the value at which it should be recorded in the books of purchasing company, we need not ask. When he is showing at 1 rupee, we should also show it at 1 rupee. 1 crore rupee, here also 1 crore rupee. So definition for cost is very simple. So definition for cost in case of merger is the book value of vendor company will be disclosed in our books also. When we acquire another company, if it is merger, whatever book value in the vendor company, that is the book value in our company also. If it is purchase, it is agreed value. Purchase, they are telling first to check whether that recognition criteria is satisfied or not. If recognition criteria is satisfied, any intangible asset which is not disclosed in the books of vendor company also we can record. If recognition criteria is not satisfied, though it is disclosed in the books of vendor, it need not be disclosed in the books of purchasing company, rather it will be adjusted in goodwill.